Morning traders, Paul here with GammaEdge. Today is Wednesday, the 24th of May. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, we're back to a overall red model, so bearish on the 0DT and a 1 to 3 day time frame really on our swing trades. The cumulative tick closed below the previous day. This is a trigger day down. We'll cover this in a little bit more detail next. And the railroad track pattern, which is a short-term view of, it's got a little bit of momentum. It also reversed and confirmed a trigger day down. So clearly yesterday was a risk-off day in context of long positions. We saw a lot of calls getting closed and some puts being opened. The long-term market model, we are weakly bullish, but it is deteriorating and can literally flip any day if it continues on this approach. Transitions, we closed at 41.45. The lower transition for the PM complex is 41.60. The upper transition is 41.65, 41.70, a little weak there. So when we close below, you know where the lines in the sand are. When we close above, you know where the lines in the sand are. So just be aware of what you got to take in order to increase your long exposure or to increase your short exposure if we move up and are rejected. Looking at the goalposts in the combo complex, minus GEX, gamma exposure remains at 3,900. It's been there forever and has been pinned. Now there have been exceptions on the end of the week where it's moved up to 4,000 in an opportunistic way, but 39 is the number. Right goalpost remains at 43 despite what we saw yesterday, but it is weakening. And this is in part due to spot price falling. As spot price falls, gamma obviously shifts. And in part due to calls being closed. We saw a lot of calls come out at the 4,300 strike yesterday. For the 0DT folks, we have a lot of them in the Discord. A lot of them follow us. 4160 and 4165 are the N trans and P trans. These are the areas where we transition. They are important. You increase your long exposure above P trans, you increase your short exposure below N trans. So just be aware of that. The upper charm strike is 4175, but it really starts at 4165. You'll see that here on a couple slides, and it extends upward from that 4165 towards 4175. Retaking 4165 obviously is the first step. If we can get there, we'll start flipping charm flows, and that'll be important. We don't think we're going to move up in that direction, but if we do, that would be what we would be looking for. The lower charm strike is 4120. That is out of the money, of course. It is put dominated. As a out of the money put dominance, if we do start to take that 4120, that'll be very, very important. Note that above us we have a large put dominated ITM structure. So right above us, this 4150 to 4160 is a cliff overhang. Again, you'll see that on the charts coming up. And since this is in the money, it's just going to continue to act as overhead resistance as we move forward. For the Discord users, run the value command for today and tomorrow to look and see where we're getting specific targeting. I would pay particular attention to that 4125 and that 4175 levels. With knowing, of course, are we above or below transition. Those are going to be really, really important. If we see a lot of calls getting opened up above transition, that'll pull us upward. If we see a lot of puts being opened, especially down below 4125, then obviously 4100 is going to be in contention here. So taking a look at the cumulative tick models, first thing to see here, this is what we call a linear down pattern. This is a risk-off pattern. And it's when it intersects the ribbon, and the ribbon's been more or less horizontal. This is a longer term view, so you've got three composite views on the screen here. You've got a long term, which is this ribbon. You've got a very short term, which is the bolded white line, and then you've got three moving averages, which are what we call the railroad track pattern. And you can see over here where the railroad track pattern has turned down. So it reversed yesterday and is moving down. So with all of this, just be aware that the long-term model is under significant pressure with us below it. The railroad track pattern is pointing down, and the short-term cumulative tick is aggressively lower than what it was yesterday. We might get a dead cat bounce, but just be aware of we've got a lot of room to make up here. Taking a look at the USC model, we don't normally show this, but just wanted everyone to see how we present this in the Discord for folks and what is being visible. You can see across the top 52-week new high, new lows, and we had a series of days, 3 days to be exact, where it looks like we were improving and things were looking pretty good. and that's the green check marks that you see across the top. The red X's show where the 52-week new lows are outpacing the new highs. This is a breadth indicator. It's a lagging indicator, but it is an important indicator because you need participation in order to sustain any direction, one up or down. So if we see greens appearing, we have confidence to increase our long exposure. If we see reds, we having confidence to increase our downward exposure. Now we have reversed. We could be in whipsaw territory. We don't know. You don't know. But just be aware, the second line down, which is sign, I've got the red arrow here. This is more or less a big sweep trade type of indicator, and it's negative. And so what this is showing is that tick over tick, we had a sustained selling within the market. You saw that here with the drop in the cumulative tick. That is also indicated here, and these are the big boys and girls who are out there playing and getting risk off. So just be aware, the net selling started right around 12:30 Eastern time yesterday, and it continued almost right up into about 3:15 or so, and then you can see that it tapered off. Taking a look at the tick SP, which is the SPX, the stocks that comprise the S&P 500. First thing to note, the ribbon is nearly flat. When the ribbon is flat, there is no trend, and this is because we've been whipsawing back and forth. Everybody knows this. There's only a few stocks of the S&P 500 that are pulling us up and down, hence why we go back and forth. Now, the cumulative tick is not weighted, so it does not put any disproportionate weight on those stocks. And you can see there has been buying, but now yesterday was net selling, and we are below the ribbon. You can also see the ribbon is very narrow. When that occurs, again, there is no trend. If there is no trend, you should not be aggressively going in any direction, right? So if you're a trend following person, you're at a transition point if you follow something that is highly correlated with the S&P 500. Taking a look at the Qs, this is the tick Q. This is important too. First of all, the cyan line, which is the slower moving average of the ribbon, is pointed down. Now, the red one is pointed up, and that's because the white cumulative tick, the instantaneous cumulative tick or real-time cumulative tick, is in the middle of the ribbon. But the fact is that this has been weak. Even though price has been moving up, it hasn't been confirmed day over day by the cumulative tick. But certainly yesterday, the sell-off yesterday certainly shows correlation with the price action, and you can see that it is now moving down. If it continues lower, everything here will turn off, and we'll get a signal to increase our short exposure in the Qs. Here is the Russell 2000. It has been in a downward move. Although price action moved up the last couple of days, the cumulative tick has not been supportive. In fact, the cumulative tick has been downward. It's been net selling, so there's been some rotation going on in the Russell 2000. But the big picture for everybody here is that this is bearish. It has remained bearish, and the fact that it is downward sloping tells you over the long term that the Russell can be sold on any rally. It just has not been participating. Taking a look at gamma structures, this is the PM settled complex of the SPX. A few things to note. So transition sitting right here at 4160, 4165, 4170 zone. That's important. Always note where your transitions are. You can see overhead, we have lost some of the near dated out of the money calls. You can tell that in the column that's marked net delta dollars. You can see that we've turned red just above us. These are calls that have been closed, and what that means is that the in the money puts at those structures or at those strikes, are dominating. Below us, you can see there's a lot of short dated deltas, puts that are going in, out of the money puts. So the out of the money put speculators are present. They're dominating the conversation below us and could continue to pull us down. Now, this is a major change from where we were yesterday. We had green above and below. Yesterday, we saw a large introduction of puts, hence why the CT was pointed down, net selling, etc. Taking a look at the 0 DTE, very clean transition here, sitting at 4160, 4165. That is your line in the sand for today. Don't argue with it. This overhang that I was talking about at 4150 to 4160 is in the money. So first of all, these are put dominated structures. They are in the money, and the charm flows from these things will be an an overhead resistance. We're going to need to see a lot of calls get opened to pull us upward. If we don't see those calls, it's going to be very, very hard to overcome this because it's just going to continue to grow throughout the day. The expiry today is very, very strong to the downside. So we have 22,000 puts, as you can see up here in the right-hand corner, that are on the negative side. That is a put dominance. And if we do move down, more and more of those puts will go in the money, which will force us down. Now, 41.20 to the downside is a real key level here. You can see that if we lose 41.20 into the 0 DTE, everything above this will go, that is a put, will go in the money. And that will, again, have downside pressure on the overall markets, with the largest downside pressure starting at 41.20 and having the largest negative charm flows. That'll be very, very important for how we end the day. If we move above 41.60, up into that 41.65, 41.70, 41.75 area, you can see all of those puts will be out of the money. They will have a positive charm flow, and that positive charm flow will be supportive. So where we are throughout the day and with the status of the intraday 0 DTE action, watched by the value command, so value SPXP, will be important for everybody to get an understanding of what is happening in real time and be able to position accordingly. The upper charm strike, 41.75, lower charm strikes, 41.20 for today. 1 DTE, a little bit looser. You can see in general, we still have a net negative expiry for tomorrow. Positioning, look where transition is. It's going to be somewhere right in the zone of that 41.60 to 41.75 zone. There are some zeros that exist on both the delta structure as well as the gamma structure. Look for parking spots into the close today. Again, targeting with the value, and then you can superimpose in your mind exactly what could potentially be our closing levels. And it could be appropriate for a broken wing butterfly, or a very narrow condor or something like that. Taking a look in the balance of the week, so the 3 days of the remaining week are shown here. You can see we have flipped over to a negative dominated structure in terms of gamma exposure. You can see above us the out of the money calls have vaporized all the way up through about 42.15. This is, again, very, very different than what we were looking at on Monday and Tuesday. It just shows the importance of what yesterday did to us in terms of the overall structure. Below us, the out-of-the-money calls, out-of-the-money puts are very much present, and they are dominating for the balance of the week the in-the-money calls. So there's a lot of speculation to the downside for the balance of the week. Again, that 41.25, just look at the shape of the downward structure here, the put-dominated structure below us. If we lose that 41.20, 41.25 zone, we're going to flip a lot of these puts in the money, and the charm structure is going to be resistive as that becomes an overhead. Taking a look into next week, as everyone's aware, we've got the expiry next week for the end of the month. Always good to keep an eye on that. What we're basically seeing is that same transition structure, 41.65, 41.70. You can see here's that 41.25 again. I can't stress enough the importance of 41.25 for everybody. Going to be very, very key whether we're above or below that level. You can also see the quarter level at 41.50 as a big number here, and then 4,200 to the upside. Taking a look at the combo complex, which is the mothership, 18 million contracts sitting here. So this is the one to watch. This is the longer-term structure. It does not change on a dime like the PM structure does. The key takeaway here, you can see the out-of-the-money calls that are just above us have started to vaporize. And that's important. The short-dated calls in a delta complex are basically shown that the in-the-money puts are dominating just above us. And think about what the charm flows are going to be for those. When we see that short-datedness, and remember charm, deltas right at the money are 50. So when we see this, there's going to be a lot of influence, a lot of resistance to plow through as we move up here. So, unless we get up to 42.15, and we are not anticipating that, we are going to definitely see some overhead resistance to the upside. Now, to the downside is important here. We're not seeing the out-of-the-money puts below us in any dominance. Of course, they are occurring, and you can see the red deltas here at 41.25. There's another one down here at about 40.85. Another one sitting down here at 40.65 and 40.55. These are the only structures or the only strikes below us that are out-of-the-money put dominated right now. This is important, right? So we have not seen a mass flow into the structure of the puts that are basically dominating or eroding the structure below us. It can happen. This is not predictive. But what is important here for your takeaway is that the structure is still bullish below us. It's weak above us, right? So until you get above 42.15, study this chart. Until you get above 42.15, you do have some in-the-money puts that are rearing through, meaning the out-of-the-money calls are not there. But above 42.15, look at the sea of green above that. These are deep in-the-money puts, yet they're being dominated by out-of-the-money calls. I'll leave it there for you to ponder, but this is not over yet. The bulls have not given up. And so just be aware of this structure. This is what we watch in GammaEdge, and would urge everyone to understand this and come on in so you see what we see as the market evolves. So last slide here, we call this landscape. We've got this JPM end of month, end of quarter for June, not May, June, that is sitting out here, 43.20 strike. It's got approximately 39,600 short calls there. We do think that is an upper limit between now and the end of the month. You can see the right goalpost here at 4,300, the left goalpost down here at 3,900. You can see the transition structure has moved down just a slight bit here. 4160, 4165 is where the quote-unquote true transition is, but you can see there's a lot to negotiate here. So we're calling that 4175 is important. If we get below this 4160, and remember we closed at 4145, so we're below that 4150 line. We've got a lot to get through, that overhang that I was talking about earlier, etc. So just be aware, we are in the red side of the overall structure. That is the put-dominated side, both in a gamma structure as well as the delta structure. For the PM complex, for the combo complex, it's still on the fence, right? As I said, the bulls have not given up, so just be aware of that. So with that, I will bid you farewell. If you have any questions, comments, want to come in, kick the tires, go to GammaEdge.us. Upper right-hand corner, there is a pricing tab. Click on it, fill out the blanks, come on in, 14-day free trial, no risk to you. All the tools turned on, great group of traders. Would urge everyone to come on in and see what we see. On Twitter, follow us at GammaEdges with an S, and then here on YouTube, two things. If you like today's content, hit that like button. Let me know immediately that I'm providing content you find useful, and two, subscribe so you get notified next time we post videos. So with that, I will bid you farewell. I know it's a little longer than normal today, but wanted to cover a lot since I've been absent, and hope to see you in the Discord. Thanks, everyone.